Hello everyone, Survivor Driver here, riding right beside you on yet another daily commute. And today's music review is going to be another piece by Kousa Sui, and this tune is called The Juice. Great little tune. You'll enjoy this one, no doubt in my mind about that, especially if you like the kind of 60s, early 70s sound. You definitely recognize that. Now today I'm going to just kind of wing it. I'm going to talk about something that I lost sight of for a number of years due to a few circumstances, but I'm kind of refocusing on it again, and that is gold and silver. And it's coming to the fore again for me because, you know, I'm kind of seeing some things. Wow, people in this province ever drive like lunatics, man. Looks like my blinkers are out of battery juice. So we may be out of some battery juice, but we're not out of musical juice. So here we go with Kousa Sui and The Juice. And so I noticed about a week ago that gold suddenly shot up $100 an ounce. And, you know, who's to say why? Let's kind of start at the basics. And people that focus on gold and silver see gold and silver as money, whereas they see national currency as exactly that, currency. It's not money, it's currency. And the 5 qualities that I've heard, although this can vary, the 5 qualities that I've heard that define what actual money is as opposed to currency are this. It has to be portable, it has to be divisible, it has to be durable, it has to be fungible, which means, 1 ounce of gold in my pocket, or like $1 in my pocket can buy the same as $1 in your pocket. That's what fungibility is the best way that I can describe it. And it also has to be, or has to maintain its value over long periods of time. And that's where currency fails. That's where currency fails. Currency does not maintain its value over long periods of time. Every fiat paper currency, or every fiat currency, I guess you could really say, that has ever been devised by man have all failed. So what you could really say is that gold and silver have a 100% success rate as money, and all currencies have a 100% failure rate. So for those that think that I'm exaggerating with something like that, you can take a look at the US dollar, for example, and ever since the creation of the central bank that stands now in the United States, the US currency has lost, I think it's at 97% of its value. It might be 93, but it's definitely in the 90 percentile, and I think it's 97. But I think you'll hear different people, it'll bounce around a little bit from say 93 to 97. So it's almost lost all of its value. So, you know, there's very few things that go up in price because of rarity. Things go up in price because of loss of value in the currency. So when one says that gold retains its value, one of the examples, a standard kind of example that they give, is the story about an ounce of gold in Roman days would buy a fine quality man's suit. So in the Roman days, you know, the suit was different, but it's still nonetheless a suit. So that would say involve a fine quality toga, top quality material, a fine quality handcrafted leather belt, and a fine quality pair of handcrafted leather sandals. And that's what a suit was. And an ounce of gold would buy you that back then. Well, if you take a look at that now, in Canada, for example, an ounce of gold is at just over $1,700. Well, you could still buy a fine quality man suit for precisely about that, $1,700, right? You know, that'd get you a nice suit, top quality belt, and a top quality pair of shoes. Would be roughly in that ballpark. So it retains its value. But a fine quality man's suit in currency, let's say in 1950 would, what would you be looking at? $150, $200? Now it's $1,700. So you can see that the currency doesn't retain its value. And it's not because men's suits suddenly became rare. You can get a fine quality man's suit anytime you want. So it has nothing to do with rarity and has everything to do with your currency devaluing, right? It's losing its value. But as I said, in the Roman days, fine quality man's suit, 1 ounce of gold. In modern days, 2019, right now, fine quality man's suit, 1 ounce of gold. So see, that's the comparison. That's the example they use to prove that gold retains its value. Now silver is right there with it. And as I've said before, gold is money of kings, silver is the money of gentlemen, barter is the money of peasants, and debt is the money of slaves. So I'm going to tell you right now, there's a lot of slaves in Canada. They don't see themselves as slaves, but there's a lot of slaves. So anyway, that's the idea of the concept between money and currency. Your currency can be manipulated. Now, here's the problem. As soon as you start involving paper, you can manipulate on the futures market things like gold. So gold is actually tremendously undervalued. So people that think that they're getting exposure to gold by buying gold certificates are actually defeating their own purpose. They are basically creating paper gold, which means that you have effectively more ounces of gold on the market, which means its rarity is less. It's more abundant, because the market doesn't distinguish between paper gold and ounces of gold until somebody says, I want my ounces of gold. Until somebody actually calls to take possession of the physical gold, there's no distinction. So if you have, let's say, 10 ounces of actual physical gold on the market, and somebody holds those 10 ounces and says, well, I'll sell you 10 ounces of gold, but I'll hold on to the gold and I'll give you a certificate, and if you ever really actually want to take physical possession, which is kind of a pain in the butt because then you got to get a safe and all that, then you just come to me, give me your certificate, and I'll give you the gold. Well, in the meantime, that guy still got 10 ounces of physical gold, and now 10 ounces of paper gold has been injected into the market. So the market really sees 20 ounces of gold. So the gold price and the silver price, and probably other commodities as well, but let's just focus on gold and silver, is being manipulated in the futures market with paper. Now, anybody thinking that there is no manipulation taking place, you just have to look back at Deutsche Bank came out and admitted about, you'd be going back about 3 years ago now, I guess. They were caught. They're caught up to shenanigans. Deutsche Bank is just like, it's just a criminal enterprise, and they were caught rigging a number of markets, basically just involved in illegal activity. And so, as part of I guess a plea bargain, you could call it, they openly admitted that they had been manipulating the gold prices and that other banks were involved in it too. Scotia Makata was one of them here in Canada. JP Morgan, I think, was one of the banks involved in this as well. It might have been Barclays, but don't quote me on that one. So there was a number of banks. It was 5 or 6 banks that were deeply involved in the pricing of gold and silver, manipulating the market, and this was admitted openly. So all of those people that had claimed that gold and silver had been manipulated for years and were being called kind of sore losers because their investment in gold and silver wasn't paying off and things like that. No, they were 100% right. The gold and silver market was being manipulated, and it still is being manipulated. And it's like Chris Martin said, these guys have been manipulating the gold and silver market for years, and they're very good at it, and they've made a lot of money at it, and they're not going to stop unless they have to. And I don't really see anything that's ever going to make them stop manipulating the gold and silver market until somebody shows up and says, I want all my gold and I want all my silver. That's when the game will break. That's when it'll come to an end. That's when the musical chairs will come to an end. So the prices are being manipulated. So they're, I would suggest to you, still low for what they really should be, below what they should really be. They're still being sold at almost what it costs to mine it. Okay, you still have an outrageous gold to silver ratio, which I think is still going to be around 70. Now you got to remember, I haven't been playing too much in this market for a while, but when I was paying very close attention, generally speaking, the gold to silver ratio, or the silver to gold ratio I should say, was about 70 to 1. So that meant that to buy 1 ounce of gold, it cost 70 ounces of silver, which is a woefully low silver price. That is an absolutely manipulated price. The natural gold to silver ratio is about 16 to 1. And the reason that ratio exists is because that is the rate at which gold and silver come out of the ground. So for every 1 ounce of gold that comes out of the ground, you get about 16 ounces of silver. And that's always traditionally how it's been. Now, it might be a little bit more than that, upwards of, let's say, 20, with the advent of better ways of separating silver from the residue. Thank you. You know, separating it from the rubble. Can't remember what the slag, I think it's called, the slag. So it might be even 21. But when you start looking at 70 to 72 ounce in terms of its dollar value, 70 to 72 ounces of silver to buy 1 ounce of gold, the silver price is woefully low, and it is being sold right now for about what it costs to take it out of the ground. All the time that I was looking at gold and silver to buy it, the whole time, people were always saying that this is the time to buy, it's low. This is the time to buy, it's low. And I would suggest to you that that is still the case. It's still fundamentally a low price. So I would suggest to anybody to go ahead and buy some. And I would also suggest to anybody that if you're going to get involved in gold and silver, start with silver first, Get used to just purchasing it. Get used to that whole concept of converting your currency into money. Get used to having it around accessible, not necessarily in your house, but having it accessible, and take possession of it, okay? The old saying is, if you don't hold it, you don't own it. So buying paper gold and feeling like you are involved in the market, no, you're not. You own pieces of paper. That's what you have. So you want the physical commodity. You want to take possession of the physical commodity. And don't forget that if you have, one of the ways to look at this as well, okay, and this has happened before, and I can give you a description of something that's happened in the past regarding potatoes as opposed to gold, but let me just finish this off. If you have, let's say, 100 ounces of paper silver in the market for every ounce of actual physical, 100 ounces of paper gold in the market for every ounce of actual physical gold in the market, then that means all of those 100 ounces of paper gold are based on that 1 ounce of physical gold. So every time you take 1 ounce of physical gold off the market, you're taking the value of the other 100 ounces with it. Meaning, if people got very frightened of what was happening economically or monetarily, financially, and decided to convert their paper gold notes into the physical gold that they represent, there would be a squeeze. The market would be squeezed. The physical gold would not be there to satisfy the market. That's what I mean when I say for every 1 ounce of gold you take off the market, you're actually taking the value of 100 ounces with it, the 100 paper ounces. Because if there's 1 physical ounce for every 100 paper ounces, that means that those 100 paper ounces are based on the 1 ounce of physical you have. Now the price in dollars of that 1 ounce of physical gold you have won't be reflected as the paper price of 100 ounces until people actually claim it. Okay, that's the game being played. That 1 ounce of physical actually has the value of that 1 ounce plus the value of the 100 paper ounces it represents. It's just not being reflected in the dollar price because the demand is not there. It hasn't been squeezed. The physical demand is not there. Once that physical demand manifests, that's why you're going to see the gold price skyrocket, because there's going to be a whole bunch of people out there saying, hey, wait, I've got gold, and demanding their physical gold. No, you don't. You have pieces of paper. The people that bought the physical gold and actually took it off the market, took possession of it, they've got gold. And they've got all the value of the paper gold you bought built into their 1 ounce of physical. Okay? So it's not a game. It's not just a mythical story that people that invest in gold and silver tell each other to make themselves feel good about it. That's how it works. And that's why people that do manipulate gold and silver are so desperate to make sure that game keeps going, because when the jig is up, the jig is up. Now this does happen, and an example of this happening was back in the early to mid 70s, there was a potato futures market that was in play. And there was, a whole bunch of potato futures being sold. And, obviously some potatoes in warehouse. And what happened was, and I think this was in Maine, if I'm not mistaken, what happened was that the potato crop had been a total failure in that region. It was some region of the United States. This took place in the United States, okay? So all the people that were holding paper potatoes, because the futures market is involved in everything. It's in gold, it's in potatoes, it's in silver, it's in onions, you name it. So all the people that were holding these paper notes for potatoes, growers whose crops failed, went in to claim their potatoes and they couldn't get them because the potatoes didn't actually exist. The guys in the futures markets, the brokers, were just selling paper potatoes with no actual real potatoes to back it, so the potato price shot through the bloody ceiling. That's how it works, folks. It's for real. So I'm going to suggest to you, I'm going to start looking into it again. I've got some gold and silver now. I'm going to go and buy some more gold. I'm going to hold off on the silver. I got quite a bit of that. So I'm going to buy some more gold. And I'm going to suggest to you to start looking into it and do the same thing. There's huge amounts of information about this on the internet. So I would suggest you look into it. And that's it for Survivor Driver today. There's lots of places where lots of reputable companies to buy the gold. Don't let anybody talk you into buying paper and just holding paper. You buy physical gold, physical silver, you take possession and have it accessible at all times. So that's it for Survivor Driver today. Thanks for joining me, and I authorize you to be a complete pervert and fondle that like button on my behalf. Thanks again, folks.